So today let's dive into the first entry module, and that is the decisional POI mitigation. So on the chart below, we can clearly see that price just mitigated our order block and made a break of structure to the upside after taking out the inducement. So this confirms this one here to be a valid break of structure, meaning we are currently in a new trading range, or price is forming a new trading range. So with that, so what should we do? Marking, of course, the inducement. So currently we said that the inducement is the liquidity resting below the currently formed valid pullback, and we can clearly see that the currently formed valid pullback is this one here. So that's the IDM, or the inducement. In our current trading range right here, we can clearly see that our order flows are alive, not mitigated, and all of them are very perfectly clear on the trading range. So actually this here is the extreme order flow. We can clearly see it right there, not mitigated, and on top we can clearly see another order flow right here, which is also not mitigated. So meaning in our trading range currently we have two order flows, and we said that the liquidity resting below the pullback right before the extreme order flow is called the engineering liquidity. So right here, let me mark the inch leak, or the engineering liquidity, like this. Right, so currently price is moving down, and we can clearly see that price is heading towards taking out the inducement, and eventually price has taken out the inducement. Then that means that this high right here, this high right here, is now a confirmed swing point. So this here is now a confirmed swing point, meaning if price now breaks past this place, then this here will be confirmed to be a valid break of structure. Let me continue running price. The decisional, whether order block or order flow, is 50-50. The one that is like the highest probability is the extreme order flow. In this, now I usually recommend, if you will not like wait for the confirmation, then clearly you can just take your buy limit order from that zone. Of course, your stop loss should be at a reasonable place. So actually you can place your buy limit order right there, your stop loss right there, and of course targeting the external liquidity. Now this is recommended, but from the decision order flow, that's not recommended, because the decision order flow is 50-50. That's the reason as to why I usually recommend, if you have to trade from the decision order flow, which is the first entry module and it's a valid entry module, then you will need to wait for a confirmation. So how do we wait for a confirmation? The way that we confirm a confirmation after a mitigation of an order block is, or an order flow in that case, is you need to wait for an, like, upon mitigation, you need to wait for a reversal pattern right here. We know, like most of us know, the reversal patterns. There is the pin bar, there is the bullish engulfing, the engulfing, the pin bars, the dark cloud cover, the piercing line, like all of those reversal patterns, like strong reversal patterns, any that will have formed on this zone right after the mitigation of the order flow, then that's now when you will take like your entry, because actually uh you can't, like I said, you should not take your entry like directly without waiting for that reversal pattern to be formed. I know most of you know the reversal patterns, like the engulfing and all of that, and we can clearly see that this here is one of the reversal pattern. Right here we can clearly see price is showcasing that it's going up right there, and you can clearly see price created this long move right here. You can see the candle kept on reducing in size, showcasing that the sellers are losing momentum, and right here the buyers stepped in, forming this big bullish candle, showcasing a reversal pattern right there, and that's where I'll be placing my buy and stop loss right below this low, and target the external liquidity, of course, and that's how I'll be taking the entry. And I'm running price to see, or I'm playing out price to see how it end up being, and you can see price is heading towards the buy side liquidity, or the external liquidity. So that's how you will be placing the entries, and this is a direct entry. This is when actually you are using the direct entry. And please, like you have seen, I am placing the direct entry from the same time frame. Don't shift into the lower time frame and wait for the reversal pattern so that you can take the trade. No, the reversal pattern, you are still waiting it on the same time frame, and you can clearly see right here in due time our price ended up achieving into the external liquidity, and I secured a nice risk to reward, that is 3.83. so this here is a direct entry, and the direct entry is based on the reversal patterns. So actually you can check on YouTube, you can learn the reversal patterns. There are a lot of reversal patterns right there, so you can learn on YouTube. And if you guys will want me also to create a video showcasing the reversal patterns, also let me know on the comment section and I will